Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 1st of February. All right, now, first Friday of the month, non-farm payrolls. That's going to be a major focus, especially with the US numbers just starting to dribble online. After experiencing this before, what I think what they do is they generally, the next upcoming data, they process it and then they try and just squeeze everything else in between. So we're just going to see how that plays out. Let's just have a look at the major currency pairs as they turn out coming into the well, not quite halfway through the Asian session, but just having a look. So we've seen those moves here after the Fed, came out and said they're going to be patient with regards rates. Now, to me, as I was saying yesterday, that's nothing new, right? They've been saying it for some time, but the market's being starved of oxygen, starved of fundamental US numbers, really did react strongly. But what's happened since then is there's been a bit of a pause across the board on a lot of these pairs. Now, the Aussie, looks for all money like it's going high. It hasn't come back down below that trend line at 72.50. It's something to keep an eye on. We do have some data I'll show you after the charts, the PPI numbers. Now, Aussie PPI, not a real big number. But you know what? In this sensitive environment where the traders are looking to get involved, it could come into play. Now, Kiwi, it's just sitting up here, just minding its own business. It looks, if anything, a little bit stronger to me than the Aussie. Dollar yen, now you'll start reading a few reports like dollar slides versus the yen. Yeah, that was yesterday. But actually, you know what? It's bounced back. Short term, it is lower, but overall, medium and long term, it's still just trading sideways. Now, I'll just skip euro just for a second because that's the most interesting pair I think coming up. Sterling, well, it's anyone's guess. Brexit and everything else going on. It is trading sideways. You know what? If anything, it's starting to look like the whole positive feeling about or euphoria over the last week or so on Brexit is running a little bit dry. So I wouldn't be surprised to see it dip lower, but it's going to be driven by these random announcements from the UK government, Parliament, PM, whatever you like. Now, dollar CAD, oil starting to whip about. Like it's hitting $55 and bouncing back $2. So dollar CAD is, at this point, if I'm sort of looking at that, well, you know what, it's sort of just trading sideways. It's got a bearish tone still looking to sell on rallies. The Canadian GDP figures were right on par at minus 0.1, which is, first quarter of negative growth, and another one of those, and we'll get, a technical recession. Producer prices were much weaker, though, and that's, didn't really see it hold on. You'd think the dollar would rally there, but you know what? It hasn't. So once again, when you see that sort of reaction to the numbers on a currency, you really got to start to scratch your head on what's going on. Now, coming back to euro, this is really coming into paint a really nice picture, and it sort of may not look like it just on the outset here. Now, we've had that the Fed, right? So we've had that little move. The market was dabbling with the top side. Now, I mentioned yesterday in the FX Market Insight, now, before you start getting long euros, just remember the ECB President Draghi's come out and said there's lower growth or growth is dropping in the Eurozone. So that's euro down, right? This is the the Fed coming out with what I think is an unchanged sort of statement, even though they have sort of tweaked it a bit, saying they'll do some tweakings to the balance sheet. That sort of offsets each other. To me, euro is still trading sideways, but we now have an interesting sort of player in the market, and that's Italy, right? So euro was sitting up around 115 yesterday. Reuters have made a bit of a bloodbath of a couple of major releases this week, Aussie CPI and also the Italian CPI. Now, the Italian CPI was reported up plus 0.2. It later, 10 or 15 minutes later, changed to minus 0.2, which was their second month of negative growth, quarter on quarter, I should say. And that is a technical recession. So euro started coming off on the back of that. And if anything, and we had weak German numbers as well. So the numbers in Europe are quite terrible. Now, we are coming down here to test this support line. It's just sort of tweaking through. Now, this is a really short-term line. I know it's got 3 touches now, but it's not awesome, but we don't have anything else to look at. So with this, we've got a picture of US numbers offset by weak European numbers. What's this thing doing? Well, I think we'll find the growing story here, and just with the charts while I'm on here, all I'm going to be doing at the moment is just tweaking that top to the new high. Now, we do have that low. I mean, you wouldn't be wrong for tweaking that support line. It does seem to be sort of forming some sort of shape, but, this is where a bit of common sense comes into play. And I'm not massively into drawing horizontal lines. You can see a lot of price action here where the euro was gravitating around 114.10, 114.30. We've got this cheeky little support line here. Break there. Does it trigger this level? Well, you probably want it down below 114 to really get your teeth into it. But what we're looking for is a catalyst. And as I said, I think, like, it hasn't been mentioned much at the moment. I think the Italian story is going to be much bigger than we think, or than what the market thinks just at the moment. So just having a look here at the dollar index. Now, the US dollar, yeah, sure, drifted lower after the Fed. But now, you know what, with euro coming back off and sterling stalling, the dollar index itself is actually starting to rally back to where it was pre-Fed. Right? As I said, I think the move on the Fed was exaggerated, and that's where we are. Like, check out this short-term trend line. I mean, it only goes back a week, but it's pretty nice on dollar China as well. So we got, a bad story out of this trade deal out of China and the US. I think there's a potential entry here above the top side, above, say, 6.71 on dollar China, dollar yuan. It's the offshore one. So that's something to look at. Equity markets, just at the moment, just to cover these before I come into that Italian data, pretty flat. So nothing really to get excited about. And that's why the news pages are showing, very little stories about global growth worries or global growth, success and all this sort of crap. You got to work out where they're just trying to regurgitate stuff and what's actual factual. So that growth story is a bit rubbish. But now, coming back into where we are today, right, there's a couple of key ones, and you need to follow the market pulse. Now, euro started coming off yesterday on the back of some Italian numbers. Now, I've got my wrong calendar up here, but if you've got Reuters Zenith, just check this out. Just if you want to add Italy, and I'd advise you to, just at the moment, it is going to be a developing story as far as I'm concerned. We've already had the Italians trying to change the budget. Now they're officially in recession. That'll be all over the newspapers in Italy, right? So when you come back to look at the numbers coming up, you want to start to factor in Italy into your Euro zone numbers. Now, we do have some manufacturing numbers here out of Italy. Keep an eye on these numbers, right? We do have the German numbers just after it. I'll just take that off. We've got sort of two key releases here. We've got a bunch. But the Eurozone, right? So Euro is now, the weak Euro fundamentals are starting to dominate that Fed decision. So you're looking at the Italian, and these all come out pretty close to each other as well. You've got the Italian manufacturing PMI, the German PMI, manufacturing PMI. You've got the final Eurozone numbers there as well. And then we've got the flash CPI numbers out of the Eurozone as well. So we've got a really good run of data. If all this data comes in low, which I'm expecting, and this is exactly what Draghi was saying, I think what we're going to see is, and just coming back to the chart, I think we're going to see an opportunity where Euro is going to come off, okay? And not just that little pony move it had yesterday. I think we might see it back down, potentially 100 points, because it'll be clear and obvious exactly what Draghi told us last week is happening on the numbers. So just keep an eye on those numbers as we go forward, because I think they're going to be quite important. Now, just to switch you over to give you a bit of a look and see what's real on these news, talk about Trump, talking about fake news and everything else. There's a lot of sort of rubbish in here. And what the news services sometimes do is try and answer why some of the currencies did what they did. Dollar slides versus the yen. Well, as you can see, by the end of the US session, it was higher, right, on US rate outlook. So that's just rubbish. Euro falls. Well, that's true. It did. And we know why it did. It's the weak German retail sales figures. It's the Italian economy going into a theoretical recession. And that's going to create a little bit of extra kicker there as well. Now, as far as Donald himself, loves a bit of limelight. So he's meeting, well, there's a meeting between him and Xi trying to seal a trade deal. That'll be very important. As I said, dollar China has a very interesting setup at the moment. And trade deal optimism, I mean, they're just regurgitating crap here with sterling and CAD. And that's been going on for the last week or so. All right, so that's where we are with the major currencies. All right, so what, to me, Euro looks like the best opportunity, especially with all these fundamental releases coming up. If I just bring you back over to the major sort of US dollar page here. So as you can see, don't fall in love with things you read. Understand what you're looking at, right, and interpreting, say, the Fed, for instance. I don't think, everyone's, I read a lot of stuff here and there, and everyone's rushing in going, US dollar to crap out, Fed on hold. And this is old news, right? Give us some new news. It'll come down to the US fundamentals, which are being rolled out, and that's where the action is. Now, if I just come back into the MyFX Trading Hub, what you'll find is, the general framework of, to me, the outlook of the majors has not changed from yesterday. If anything, when you're looking at it, the dollar index is very close to going back to a sort of sideways moving motion. Dollar yen is just trading, it's trading slightly down on the hourlies, but the rest of the charts, it's sideways. Dollar CAD, still got a drifting lower. Dollar Swiss is plain and simple sideways. Euro is it's trading sideways at the moment, but if we get this weak data or it breaks down through 114, 114.30, then that's going to move to the downside. This is the one that you want to be watching, I think, going forward. Sterling, Brexit, technically up. Aussie and Kiwi have enjoyed a little bit of weak US dollar euphoria, but they may roll over if Euro does as well. And that's where we are at the moment, okay? So you come into the major data releases now, the Chinese numbers. Now, the correlation between the Aussie data, Aussie and Kiwi, has broken down a lot, but it still is important to those countries. So it may come into impact if these manufacturing numbers are weak or strong for that matter. Now, then you come into the to what I think is the really good zone to be looking to trade. This is the European session. As I said, these Italian numbers wouldn't usually be highlighted anywhere, but they are up at the moment. And that's followed 5 minutes later or 5 or 10 minutes later by the German market manufacturing PMI numbers. And then a little bit later, you've got the, not much later, you've got the Euro CPI flash estimate. In amongst it, you've got the UK manufacturing data. Usually this is a really high impacting number, but at the moment, it's just going to get caught up in the whole Brexit issue, sorry. Just had a bit of a brain freeze. Now, just have a look down here, down the bottom, US non-farm payrolls. This data comes out in the ISM manufacturing PMI numbers. These numbers will be, obviously the non-farm payrolls, it's probably the most explosive number in the market, right up there with the Fed announcements. So we could see a serious move here if the non-farm payrolls are released and then they are particularly strong. It'll turn around that move from the other day. At the same time, if these numbers are really weak, well, then we're going to get a really big move to the downside of the dollar. So US non-farm payrolls has got to be on your hit list. But just remember, with these numbers, right, see the color coding I've got here on the calendar. Blue means there's no trade restrictions for those traders in the funded trader program. Yellow means you've got to be square before it, but you can trade straight away. These red ones, you've got to be flat 5 minutes before. And also, you can't trade the number till at least 30 seconds after. And what that will do is, it's not to limit your trading ability, it's to limit the amount of risk in the market. These red numbers are hugely volatile. There's less liquidity in the market around the release. The liquidity from all the banks comes back online within 20 to 30 seconds, and that's when most traders start trading. So you need to understand that. We're not trying to limit your ability to hit these things, but what it will do is it'll save you getting hammered by price fluctuations and a lack of liquidity, which widens the spreads. And I can tell you, with a lack of US numbers, if these numbers do come out as expected, then as in rolled out today, you're going to see an explosive move if there is some sort of variance, because we've been starved of those US numbers. All right, guys, that's pretty much it from me. It's a good time to tune up your charts, obviously. Now, with just coming back to the charts, just to finish, I'm not exactly sort of updating a few of these trend lines. This Aussie previous resistance line is now acting as support, so you want to leave that exactly where it is. Same for the Kiwi. Now, there's no real support level just at the moment for dollar yen. To me, I'm just watching that resistance line on the top side. This is why Euro's in the game too. It's got support and resistance. I know sterling does as well, but the big Brexit, the big B, is making it probably too hard to trade at this stage. Dollar CAD, it's got a downward motion, but just keep an eye on oil. It looks like it's sort of rolling back towards $50. So that could cause a little bit of loose, non-direction trading in dollar CAD. All right, guys, that's it from me. Have a good Friday. Actually, one other update. Sorry, I should just bring you back to this. For all of our traders, just coming back into, it's the end of the flock as we know it, the previous trade zone. What we do have is the new trade zone is online. It's all fully tuned up. I'll be adding a few support videos to this today, but it is going to be a very good resource. Okay, it pretty much does everything. As you can see, you get notifications. There's a lot. You can talk between each trader. You can have trader groups, all sorts of things. But I'll give you a few more updates as we go through the day on that one. All right, guys, that's it for me. Yeah, have a good trade day, and we'll see you in the 247 trade zone. Cheerio.